Hey guys, All in Crypto here and welcome back ladies and gentlemen for another YouTube video. I hope you've all had an amazing week so far despite today's recent sell-off, and I'm sure as many of you are anticipating that is exactly what we're going to talk about today and what's happened in this video. We've got a lot to talk about. We're really going to be trying to put things into context because there's many of you that are new to the crypto space that are probably feeling a little bit of fear right now, and that's totally normal. I've been here for so long that on days like this, it's not really fear that I feel, but more excitement because I get the opportunity to invest in an asset class that I believe in, and that's exactly what crypto is, or is certainly going to be. It's not yet an established asset class. It is for people like me and you. But for the kind of traditional real world, if you will, it's yet to get there. And that's what you're experiencing right now. You're experiencing volatility that comes with an emerging market. I'm also going to talk to you, because this is really something that will help put things into context, how markets work and how price works in association with a said asset. Because if you can understand that, you will really come to terms with the fact that price is, in many occasions, quite a poor representation of true value. And that's something as an investor you really want to pay attention to. What's the true value of something? Not necessarily the price. The price is largely just noise and a distraction from the true value of an investment. So we're going to talk about a lot in this video. If that sounds good to you guys, strap yourselves in. What I want to look at is Bitcoin. I want to look at the overall market, of course. I want to talk to you about the fact that this volatility that we're experiencing, in my opinion, is actually a good thing because it's setting us up in much the same way for 2017 and 2013, and how that year ended. You know, I'll take it off log. This is how 2017 ended, and we had this September sell-off similar to what we're experiencing today before we went parabolic. And 2013 was a very similar story. September, let me just pull this up for you. This is September here, guys. You have this sell-off before we then go parabolic. And I actually think that that could be on the cards for this year. We followed the Bitcoin 4-year cycle theory very, very closely today. It's what allowed me to accumulate during this bear market. And I have reason to suspect that we're going to continue to do so. We are certainly following it very closely to date. So where should we start? Well, let's start with Bitcoin. In fact, let's start with how much the overall market is down. And the overall market is only down by around about 10%. This is somewhat normal, which is a strange thing to hear for people who are new to this space. Welcome to crypto. Like I say, you're a part of the most volatile asset class that there is. And you've got to take the highs with the lows. And remember, volatility works to the downside and the up. And this is all tying in with where I think we're going and why there's a silver lining within what's happened today. So the overall market is down around about 10%. That kind of puts things into perspective. Bitcoin's down by around about 8%, Ethereum 9%, Cardano 13%, Binance Coin 12%. And if we look, you know, we had this March or May sell-off, I should say, that everybody kind of went through and we're calling for a bear market. And since then, guys, from our high, we recovered by around about 70%. And today, we're still up by around about 60%. So that kind of put things, not 60%, sorry. We're up by around about 62%. So that puts things into perspective. We're still quite significantly up in terms of an investment from our kind of lows back in June and July. So you've kind of got to expect this. We had a volatile move to the upside. You get a pullback from that. You get overextended from these EMAs and you kind of come back to kind of find your feet again before continuation. And this ties in with something that we have literally seen, and I'll show you this on the Bitcoin 4-year cycle chart. This is September here, guys. You have a sell-off. Can you see this? This is September here. You sell off. This is, where are we? September here. You have this little sell-off here. And this is 2017, which is a bull run that I'm sure we all remember or certainly heard about. This is your September sell-off right here, guys. You're doing the same thing today. And if we look at 2013, which is something that we follow probably more closely, or we're adhering to that kind of blueprint in more of a close fashion, this is September around about here, ladies and gents. You have this big wick down before we see continuation in this bull market. And you are still in a bull market, guys. How will you know when you're not? Well, essentially, you will take out this low right here. Once you take out this low, you have the possibility of an ABC correction. And there is the potential that you are entering a bear market. And we're not seeing that yet. Even though this has been rather a brutal sell-off, in actual fact, it's kind of adhering to what crypto does. You know, it's a very, very volatile asset class. So I hope that's putting things kind of into perspective, and is actually, you know, there's some good news off the back of that. We're very much following 2017, and we know how that year ended. You know, it wasn't really till after September, towards the end of the year, that you make the most amount of kind of gains within your bull run. And that's really what I'm expecting to happen, you know, this year, guys, into sort of early next year. I think the cycles are definitely lengthening, so I do think we're going to extend a little bit into next year. So Bitcoin, of course, is the driver of value in the space. It's that tide that rises and sinks all ships. And this, what causes this sell-off? Let's get into that, because that's going to really put things into context for all of you. Now, many people don't understand how markets work. Markets essentially work, and price works in relation to that, by a very small amount, in most cases, like 20% or so of the overall supply of a Z asset being traded. So you can have these kind of volatile swings. So for example, let's use Cardano as an example. So this sell-off right here, from where we are, it was around about 31%. So why have we sold off 31%? Well, what's essentially happened is the liquid supply on exchanges has had a sell pressure of 31% to the downside. You know, there's been an overwhelming sell pressure that's kind of squashed the buy pressure, and you've seen that sell. So it's not a reflection of the overall supply getting sold off, because we know 70% of Cardano is staked and kind of illiquid, if you will. And it's really the liquid supply that's on exchanges that gets sold off that causes this to do it, which is a very small amount of the overall supply. So this is why I'm saying price is actually a very poor representation of true value, and this is something that's important to remember. And these kind of wicks that we have, after just explaining to you how markets work, or these big candles that we have, are essentially caused by liquidations. Now, liquidations occur. You can take a leverage position. This is a symptom of leverage in the cryptocurrency markets. Now, leverage is where somebody takes a long or a short position with leverage. So they'll 20x their position, but the kind of rule to that is that you can get liquidated. You have to provide collateral as a result of you being able to take that position out. And if your position, you'll have a liquidation point, and if that liquidation point gets, because just as much as, you know, your 20x will move to the upside 20x, it will also move down, and you can get liquidated very easy. And what will happen when you get liquidated is your collateral will get sold, which will cause a huge amount of sell pressure. It's why we see the market. Many people don't understand why cryptocurrencies sell off all at once. So if Bitcoin sells off, the rest of the market will sell off. It's really because of this, and there's still lots of liquid leverage in the system. It's one reason this sell-off was as severe as it was, and was rather unorthodox to 2017. There wasn't a lot of leverage in the system back here. There was a little bit, but not a lot, and certainly nothing in comparison to where we are today. And that's why this sell-off was as severe as it was. So that's hopefully putting into perspective why you have these big red candles. And this is something you've seen time and time again, to be honest with you guys. I mean, can you see these candles and how we kind of come down, and they're these big kind of horrific candles, and everyone always panics in a similar manner, only for us to go on and make new all-time highs after we've kind of cleared out some of that leverage. I mean, March 2020 was a perfect example. Of course, this was a bit of a black swan event, a bit of a freak event. But one thing the cryptocurrency market has shown us, and this is best illustrated on this chart, is that there is a trend for crypto, a macro trend, and that is a bullish trend. This is an emerging market class that is yet to be established. And when it does get established, I think we'll be in the tens of trillions of dollars. And that's the journey that cryptocurrency is on. So I hope what I'm doing is maybe putting things into context for you to kind of show you how markets work, and how, you know, this is a very volatile asset class that hodlers will win in this game, and that's been tried and tested. That's a tried and tested method to date, and I believe that's going to continue into the future. So what comes now, ladies and gentlemen? Well, you could continue to sort of bump your head and make your way down, but ultimately one trait that's apparent is if you look at this wick, look at how much this was bought up. So you've had a lot of people that are willing to come in and buy into this, essentially. And I actually think that this is probably your bottom for here. You've had that flush out of leverage, and you're going to start building from here. You know, you'll notice that Bitcoin was making marginal higher highs, which doesn't always mean you're going to go down. We do have a schematic. I'm not sure if I've got it here. This was a schematic that we took from back over here, guys, that we applied to today. And we said, look, and can you see even within this schematic, guys, how you have these kind of volatile pullbacks before it's kind of a V-shaped recovery is what I'm kind of anticipating. Can you see how well these kind of match up? And you do have these volatile kind of moves to the up and downside as a result. And that's essentially what I think we've all just gone through as hodlers. So I'm really anticipating a recovery from this and continuation within this bull run. I think the fact that we're seeing this kind of volatility is a real attribute to the fact that we are essentially setting up for a bit of a parabolic run towards the end of the year. You know, this is September. Here, guys. Let's take a look at 2017 as a kind of blueprint. It's always good to come back and kind of reference history. This was a 41% sell-off in September, only for us to then go on and go up round about 550%. Now, I don't think that's going to happen necessarily, but what I'm really trying to show you here is that, in my opinion, you've really got nothing to worry about. There's a lot of information that I'm trying to cram in here, just because it's not a very easy thing to just kind of briefly go over. I'm really trying to give you method to my madness and the madness of the cryptocurrency space, because it is it's the Wild West, really, guys. And it's not easy to be an investor in these markets. You know, I've been through this so many times. I was here in 2017 going into 2018 and had the luxury of going through that brutal sell-off. And all of that has really been training. I mean, look at where you were, or look at where you are in comparison with 2017. This is 2017, and look at where you are today, guys. You're hugely in profits, even from your all-time highs. You know, and this is why I'm saying hodlers win in this market. You know, ask the people who are rich off Bitcoin how they got there. They just bought and held, basically, and that's the benefits of being early in a emerging market. Now let's talk about Cardano. So we spent a bit of time. So I hope, and let me know in the comments if there's anything else you guys want me to kind of go over. I hope I'm conceptualizing everything and showing you that this is really just part of the crypto space. I mean, it's quite a normal occurrence, and that sounds really, really quite shocking to many of you out there. I mean, can you see this? I don't think this is quite as severe. I think this is this is around about 16%. You have your big wicks at the bottom here. The only really difference is here, guys, is this EMA held you a support, which is typically what happens in a kind of upward moving or an upward trend. Here, you did have one where you sold off quite significantly. Let's take a look at this, guys. This was around about 18-19%. But if you look at what happened after there, you kind of come up and you retake ground, and you are still in a bull market. I've already told you, you know, the only time you really can confirm that you're in a bear market is if you come below this previous local bottom, and then you'll kind of, you know, you're setting up new lows. You went into making new higher highs and new, not higher highs, but you went into in this trend reversing. You could come down and reverse out. I don't think that's a very high likelihood at all. I do genuinely believe that we are going to continue in this bull market, and hopefully I'm showing you that in this video. Now let's talk about Cardano, and let's talk about that golden entry point that I spoke about. And what I want to do, guys, I want to switch it to log very quickly. I want to pull up our Elliott wave theory tool. You guys know that followers of me on the channel that I believe we're in something called an Elliott wave theory structure. And essentially, we're on our fifth and final wave, ladies and gentlemen, which I believe is going to take us to around about that $7.50 to $10 price range. I still believe that, despite what's happened today and for the reasons that we've spoken about on this channel. And one thing that we did keep mentioning was how you're quite likely going to come back to your EMA, and how I essentially knew that, or had a good hunch about that, was you see in these upward movements, guys, how you come up, you come back to your EMA, you come up, you come back to your EMA, you come up, you come back to your EMA, and you do this the whole way along. And I want to show you that Cardano's actually done something very similar to this before, and recovered in much the same way that I think it's going to. Can you see this over here, guys? Let's make this a little bit. So this was you'd finish your one wave, you've gone into your two wave sell off. So I think you finish your three wave and your fourth wave sell off in regards to where we are today. And you're now in your fifth wave, and you've entered this fifth wave in a very similar way to how you've entered your third wave. You've come down, you've come up, you've had your first break, which has took out your previous high, which is the exact same thing we've done today. Before you then come down and you have these kind of nasty wicks to the downside, and you ultimately do recover from this. And this is a very similar thing to what we're seeing take place today. Can you see this? Very, very similar structure with these kind of nasty wicks, these nasty liquidations before we then see continuation of this bull run. And that's exactly where I think you are today, guys. There's very, very similar traits. Yes, this was a pretty severe sell-off, but this actually could have provided a kind of golden entry point, if you will. And that's what I'm anticipating. I'm going to personally, this may be, and it's quite sad for me to say this, the last time that I buy Cardano in this bull run. And certainly potentially into the future. If I see opportunities in the future and I look for good entry points, but certainly this year, this potentially could be the last time that I'm buying Cardano, which is quite a sad thing to say, really. But I'm going to be taking advantage of this. What you guys choose to do is totally up to you. I'm just here to kind of perhaps make sense of what has or hasn't taken place. So that's where we think we are, guys. I hope that's made some sense. I hope I'm kind of showing you that this is somewhat normal. Remember that fortune favors the bold. And in the cryptocurrency space, you know, if we look at the total money in crypto, pretty much every single dip within Bitcoin's or crypto's history has been a buying opportunity. And I believe that's a trend that's going to continue as the market as a whole is still on a journey. We're only at we're at $2 trillion, $10 billion in terms of market cap. I think we're going to get into the 10 trillion and above, and we're going to continue on from there, as this is the new thing, guys. Much the same as the stocks that came out of the internet were the new thing back then and still are today and play a big part in all of our lives. Cryptocurrency is very much on that trajectory. So that's where I think we are. And like I say, 70% of Cardano is staked, yet we had a 32% sell-off. So how does that make sense? Well, it's because markets work on a very small amount of the overall supply being traded on exchanges, and that's what kind of moves things to the up and the downside. Remember, it works in both ways. I hope this has been a useful video for many of you out there. I hope people aren't too worried about this. We've been here before. March or May was a perfect example of that. I mean, this was a very brutal sell-off of around about 55%. And if you held through that, right now you'll kind of know what you're looking at. And there is absolutely the possibility of more downside. There's the possibility that you set up a similar structure to what you had over here, where you have this kind of falling wedge that takes place. You kind of do something like this before you then pop out and we see continuation. And that's what we're expecting, ladies and gents. So I hope that's put some of your minds at ease. It's important for me to get on here. I did tell you on this channel, and I've made sure to continue to tell you, I'm going to be here for the good times and the bad. I'm going to be here into the bear market and the next bull market. This channel is not going anywhere, guys, and we're not going to leave you on days like this. This video is a little bit later than normal, just because, of course, you guys know I'm active in these markets. I trade with about 5% of my overall net worth in the crypto space, and of course, I've got positions to take as a result of that. 95% of my overall net worth in crypto is staying put. It's a hodl pot that I add to whenever I get the opportunity. And I haven't sold any crypto during this because, like I say, I'm anticipating more upside to come. So that's really all I have for you guys. I just hope that that's put things into context, give you a bit of an explanation about why things all sell off together and how these markets kind of work. And that's where we are essentially today. I've shown you a number of examples of this happening before, and we've seen continuation off the back end of it. This has just been quite a fast run, if you will. If you look at 2017, we have these pullbacks very, very frequently. Up, down, up, down, up, down, up, down. Can you see that? And that's essentially what you've done this year, guys. Up, down, up, down, up, down. And we've still got more up to come, I believe. And we are following a 2013 blueprint very, very closely. And in regards to Cardano, you had this bullish cross here that really signals the start of every kind of your next. So you have your bullish cross here, and entry points are really when you come back to your EMA and you have this kind of this kind of bounce off your EMA. So you're 20 or you're 21 and you're 55. I'm using the 20 and the 50. You'll come up. These will come together, you'll bounce, and you'll see that continuation. So in my opinion, everything's fine, guys. You've just got to huddle. Welcome to crypto if this is your first experience. This will not be the last time you experience it. Let me make that absolutely apparent. And I hope you enjoy the rest of your day despite what's gone on today. Thank you very much for watching, ladies and gentlemen. If you enjoyed the content, a like is always appreciated. So is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot, guys.